Hey guys, Gold Streams here again. I want to talk about a trade I took today. Well, two trades I actually took today. So it's the 7th of February. It's a Friday, right? It's the end of the week. It's NFP day. As you can see, came into the market. The market was consolidating, and it was sort of a clear consolidation up on top at between 28.68, coming down to sort of like 28.66. It broke below and the move down sort of happened, and it was a beautiful move down, and it was a move down of like 50 pips. I didn't catch this move down. This was an hour and a half before my trading window. So my trading window is pre-London, so 2 hours before London Open and 2 hours after London Open. This was an hour and a half before pre-London. So that's fine. I came into the markets. Literally, the move had already happened. It's very clear what I'm looking for. I'm looking for support now to be created, that support to be broken, and then I can get continuation of the downside. The reason I'm interested in sells in such a bullish week is because we've had such a bullish week. If you keep in mind now, the daily candle the daily candles have keep moving up, right? Have kept moving up, which means the weekly candle has constantly been moving up. I expect a wick on the weekly candle to be left. For that wick to be left, you need retracement on the daily, which means you need bearish movement on the 4 hour, which means the 1 hour and the 30 minutes are going to reflect that. Okay, so it's important to understand higher time frames and see what you expect. Understand what you expect to see from the market and trade that. So that's why I'm looking for sales. Right. So very simply put, I'm waiting for this 30 minutes to close. I'm not going to take a trade until this 30-minute candle finished closing. I want to see support be formed. You can see it's a volatile candle. It broke the low straight away, and it started breaking the high directly as well. The support I have marked on here at 28.48 on this chart at the moment is the daily candle low. It means if that support gets broken, the daily candle will be flipping bearish. So that was sort of the idea for the trade. That is what I was waiting for and what I was sort of keeping an eye on. Now, once this 30-minute closed, you can see it left a massive rejection wick to the top side. And on the left-hand side, I put what the 15-minute time frame looked like. On the 15-minute time frame, you see you had support, a bullish candle move all the way up, and then a bearish candle, right, which is this current candle that's open, came down and broke the previous bullish candle low, right? That was my entry. That's why I took an entry here. Now, risk management is my number one priority on the charts, right? I can always control how much I lose. I can never control how much I win. So I had two risk management ideas in this particular trade. I took a very similar trade, by the way, on Wednesday. You can see the trade here on Wednesday. The only difference for Wednesday was it was a 30-minute confirmation. 30-minute confirmations are much stronger. And we ended up taking like 30, 35 pips out of the trade, which is fine. In terms of this candle and in this particular trade today, the minute the previous 15-minute candle broke the low, I'm not expecting it to retrace back into the zone, right? I'm not expecting it to retrace past back up to past 28.62, right? It's got no business coming back up there. So if the candle was to come back up there, I'm closing 85% of my position. The reason I'm being so harsh is because I haven't actually waited for a candle confirmation. I've entered this purely of impulse, right? I've entered this purely of impulse. That means I'm being very, very harsh on risk management. It's a Friday. I'm ending the week. I'm nearly on about like 6% profit for the week. I don't want to jeopardize any profit. So Friday is a very, very risk averse day. Okay. So you can see here the candle's coming back up. Soon as the ask price goes back up into the zone, I close 85%. And the reason I've moved my stops a little bit higher is because spreads keep opening up. Now, spreads on Dominion markets are really good. I normally get spreads of around like 1.1, 1.2, 1.5 while in my trading window. But for some reason, I saw spreads of like 2.5, nearly 3 pips. You see, it kept opening up there. I closed the position at the original stop loss anyway. So it was fine. I just moved it because I didn't want spreads to open up and take me out. That's right. Now I'm waiting because I'm down like 0.6%, right? Because I managed risk. I'm waiting for the 15-minute candle closer, right? If the 15-minute candle can close, very, very simply, if the 15-minute candle can close below 28.62, which is the support I have marked, if the 15-minute candle can close below that level, then I'm going to give this trade a second try, right? I'm going to give the same trading idea. It doesn't mean I'm going to look for buys. I'm not going to look for anything else. I'm just going to give the same trading idea a second chance. Again, I entered this particular trade with 1.8% risk, right? I ended up losing 0.6%, which is completely fine, right? Because risk management helped me actually lose a lot less than what I had in the skin in the market anyway. So now I'm waiting to see, as this 15-minute candle is approaching a close, I'm expecting it to come down and sort of close below that area. I'm going to enter the position. The one thing that I want to mention is you have to stick to your bias. If you're looking at sells in the market, just because you took a sell position, okay, doesn't mean, and it didn't go your way, doesn't mean that you can now just jump on a buy and say, well, if this isn't going down, it's going up. Trading doesn't work like that. Okay. If you're looking at sells and you entered impulsively, which I did, this was an impulsive entry, then I'm waiting for confirmations. I entered as the 15-minute candle was just about to close, right? I think it was like a minute or two before closing, and it closed. This is the 30-minute time frame, guys, by the way. Now you can see we got a bit of retracement. Normal circumstances, if this was like a Tuesday or a Wednesday, I would have added another position on retracement. It's Friday. I'm not adding any other positions. Okay. I'm letting this run. If it comes up and it hits my stop loss, it means I'll lose in total 2% for the day. If it comes down and hits target where I'm expecting it to hit, it means I'm going to be up like 1.1% or 1.2%, considering the loss I made, which is completely fine, right? It's sort of just what your idea is and what you're expecting to trade. So no, sorry, if it came down and it hit target take profit completely, I would have been up 2% for the day. Now I'm waiting for this 15-minute candle to flip bearish. Once this 15-minute candle is finished making its top wick and it's flipping bearish, and literally by flipping bearish, it would have been going past where my entry point was. Then I'm going to move stop loss to, you can see the 15-minute time frame. I'm going to move stop loss to the high of the current 15-minute candle. So now I've got even less risk in the game. I'm not risking my full risk anymore. I've moved my stop loss by about 7 pips. Okay. I'm waiting for this candle to keep moving down. I've got good clean range on the left-hand side. This trade went from being something like a 1 to 1.3 risk reward to coming up to like a 1 to 2 risk reward. Amazing trade. The minute the low was broken on the previous 15-minute candle, right? Which means the 30-minute candle is breaking its own low, right? Because this is the second half of that 30-minute candle. I had extra confirmations that the market was going to continue moving down, right? I don't want to be in a trade for a long time. I want to be in the trade while I'm comfortable with it. If I see this candle come up and sort of start to retrace and start testing, it's like flipping bullish again, basically. I'm going to close at least 50% of the trade right there, right? So I'm very risk averse. You can see the market came down, started breaking the previous low. It broke the previous wick on the left-hand side as well. So it broke the previous 30-minute low as well. We're good now. We're sitting at around like 14 pips. I put stops at break even, right? Because I'm not interested in taking a loss and going from 14, 15 pips to a loss, right? And I'm letting the trade run. It's moving quite nicely. And it came down and they hit like 22, 23 pips, if I'm not mistaken. And we closed full at around 23 pips. It's a Friday, ended the day in profits, ended the week in profits. It's been a fantastic week. We've had very, very good volume with the trade wars going on. And let's hope we can continue this sort of volume next week as well. And yeah, we look forward to trading next week with you guys. Let me know if you have any questions. And again, please don't forget to subscribe onto the YouTube channel. With daily breakdown videos will be showing up. All right. Thank you guys.